The markets, please. Now it's a sea of red. The Dow is off 40, S&P down 30. Look at the Nasdaq go down 1.2%. Check out Nvidia, please. They report tomorrow after the closing bell. They're down 2.4% as we speak. Let's bring in Tom Hayes. He joins me. Tomorrow, the big deal is the call that comes after the release of the numbers. That's what's going to make or break that particular stock. What are you expecting on the call?
Well, that's it. Absolutely right, Stu. Guidance is the name of the game. And the theme of this earnings season has been great earnings and revenue. We had earnings growth of 16% for the S&P, but the guidance was weak. S&P earnings came down from 275 estimates down to 270. Some shops have it below. Nvidia is going to be no different. I think earnings will be good, but the name of the game is going to be guidance. Good news is Mag 7 committed to $300 billion of spending. The DeepSeek did not shake the Mag 7. They said, we're going to spend $300 billion. The bad news for Nvidia is they don't control their own destiny. They are at the mercy of Taiwan Semiconductor, who has limited capacity, which is why 4 months ago, when Intel dropped below 20 on your show, we said, buy it. The government is going to stand them up. They've got a $17 billion revenue fab business. They're eventually going to help NVIDIA, but for the time being, their data center revenue growth has been decelerating. A year ago, it was 250%. When you're growing at $4 billion per quarter and the base is getting bigger, by the end of this year, their revenue growth is going to be below 50%. Still sounds good, but when you're trading at 30 times sales and 44 times earnings, sometimes you need to take a break. And that's why NVIDIA stock price has had negative returns since June.
So you would not be buying NVIDIA at 127 this morning because you think there's a good shot that it goes lower after tomorrow's earnings call, correct?
Correct.
What about Microsoft? They're back to $400 even. Well, what about them?
Look, Magnificent Seven, we've been warning on your show for a couple of months to trim back Magnificent Seven, not because they're not great companies. It's just price is what you pay, value is what you get. And what you have seen year to date is the Magnificent Seven is down 1.5% year to date. Why? Because their earnings growth, again, is decelerating from 33% last year to now it's expected to just be 16% this year because of all the CapEx, because of all the spend without a clear near-term return. And you know the market likes near-term returns, Stu. So that's why, and the multiples are still high, even though the earnings growth is coming down. People are getting wise to that, and they are putting their money elsewhere in the unmagnificent 493 and in international. Yep. European stocks up 10% year to date. Emerging market stocks up 7.5% year to date.
We hear you, and Microsoft is killing me. Thanks very much indeed, Tom Hayes. Great to have you with us. Thank you,
Stuart.